Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm the senior trader at the Forex Super Model, and this is our data review for Monday the 29th of the 3rd to Friday the 2nd of the 4th 2021. So it's our data cycle model. Basically we've modelled tier 1 and tier 2 data. It's our version of the economic calendar in numerical terms. We've got January data, February data, March data, which are discrete month data, and we've got the first week of April, which we just had, the 29th, the 3rd to the 2nd of the 4th. Right, we've written it up. We're going to start it as we go to save time, but let's make a start then. So China, tier 1, -5, -5, +4, +4. So we've seen a slight pickup in tier 1 data in China, and tier 2, +10, -4, deterioration going into February, and then a ramp up in March, +11, and -1, a little bit light on the tier 2. Dollar then, -5, +1, -6, +4, so a fairly mixed picture in the tier 1. The tier 2 then, +24, +36, so very strong going into the back end of February, and then fall off in March, -8, and so far this week gone mild improvement. So we're going to stop it there. Don't go away. We'll write up the others as we go. Right, we're back again. We've written up German data and the EUR as a block, the 27 countries making up the EU. Right, so Germany then, tier 1, +4, +7, +2, -1. So we're seeing a slight rollover in German tier 1, +7, +11, +11, and 0, similar sort of situation in the tier 2. EUR then, -6, +13, -2, -2, tier 1, and the tier 2, +5, +6, +14, +1. So we are seeing a maturity in the German and fed through into the Eurozone as a whole data cycle. Stop it there, move on. Right, welcome back. Next to Yen, JPY, Pound, GBP. Yen then, tier 1, 0, 0, -2, +2, so you're seeing neutral to slight improvement on the tier 1, +17, +5, -6, +7, so strong January rolling off until the end of March, and now starting to pick up in the tier 2 in the first week of April. Right, the pound then, +3, +8, 0, +2, so an improvement, and then a sort of a maturity again, and slight improvement on the tier 1, +5, +11, -8, deterioration March, and now we're sort of nudging forward again on the tier 2, +3. Right, stop it there. Right, the next two, Canadian dollar, CAD, AUD, Australian dollar. CAD then, +8, -4, +6, 0, so sort of a cycle mixed. We're fairly neutral at the moment on the CAD tier 1. -1, +7, +5, +3, so generally positive on the tier 2, albeit a relatively low level. AUD, +2, +2, +6, 0, so we've got improvement through the tier 1, and now a fairly neutral in the first week of April. +6, +8, +15, +2, so we've had significant improvement in the AUD data cycle, and we're still in the positive zone for the first week of April. So last two coming up. Right, back again then, NZD, New Zealand dollar, CHF, Swiss franc. Right, NZD then, +2, +2, -4, 0. So we've got a mild positive deterioration, and then we're neutral. Tier 2, -2, -7, +2, -4. Generally pretty weak on the tier 2 in the New Zealand. Swiss then, 0 plus 200, pretty flat really for the tier 1, -2 plus 11, pretty strong February for tier 2, -1 plus 1, so neutral after this strong February for the Swiss franc. We'll rub this off and we'll do the analysis then, so don't go away. Right, let's do some analysis and put this into context then. So what's happened with the China data cycle? Basically, the China data cycle is on balance, it's significantly up on the tier 2. It's only fairly light minus on the this week, and it's improving on the tier 1. So the China data cycle is moving forward. The dollar data cycle rolled over in March, but is now starting to look semi-positive. So the German data cycle is started to roll over really. So that's where we are in the German, and likewise the tier 2 in the Eurozone is quite strong, and the tier 1 is neutral. So we'll give that a neutral to up on the Eurozone. The yen, what have we got on the yen? Well, the yen tier 2 is pretty strong, and the tier 1 is starting to show improvement. So the Japanese data cycle is starting to improve. The pound March was pretty weak, but now it's starting to show signs of improvement. So we've got an improvement in the pound data cycle. The CAD has it been improving, and it's neutral on the tier 1, and it's hanging in there on the tier 2. It's early to say because it's the first week of April. So we'll give the CAD a mild increase there. The AUD has definitely been improving, so we'll give the AUD an improvement there. The NZD data cycle has been increasingly soft and is looking to head south really, and the Swiss franc is basically neutral to slightly positive really. So that's where we're at with that then. So what have we got then? We've got an improving China data cycle. We're moving into the second quarter. July is the 100th anniversary of the People's Republic of China, the regime. We've got a declared greater than and equal to 6% increase in GDP target for China. Dollar, we're looking at major fiscal stimulus, infrastructure package, we've got potential for rising in taxes, and we've got printing. The Fed is going to be printing like crazy. Germany then, they've got a bit of a COVID issue in Europe, and the ECB basically is conducting open market operations to put a cap on yields. That's their plan. The yen is starting to see improvement in the data cycle, but you've got the equity transmission here on the yen to bear in mind there. The pound is sort of below the radar, chugging away, quite positive. You've got a positive COVID situation on the pound at the moment. We're ahead of the game on the jabs, and you've got data sort of grinding up, and we've had positive GDP. Right, the CAD, we've just had this oil OPEC decision, which has been digested by the market. if you get a rise in global activity, you're going to get a rise in the oil price, which is, or at least stability in the oil price, probably greater than equal to $60 a barrel. And the AUD is going to be one of the main gainers from this scenario of China. China's going to be sucking in imports to achieve their 6% GDP growth. And one of the main sources of raw material imports will be the AUD. So you've got that linked with the China story there. Okay, and you've got an improvement in the data cycle. New Zealand, arguably linked with the China story, but it's cooked. New Zealand is pretty cooked. It's operating at 67% of the model floor. So it's only really the Swiss franc that is above that at 70%. The Swiss complex is the strongest of the lot, next the New Zealand dollar, and the pound is the weakest, operating at about 27% now from the model floor. So in terms of elbow room, the Swiss and the Swiss franc, obviously they're heavily dependent on their competitiveness with Europe, so they won't want to get too far ahead. So they're likely to intervene if the Swiss franc keeps steaming. So going forward, then we're looking at this situation where we're likely to get improving China situation, sucking in imports from improving the commodity currencies. We're short the New Zealand dollar in a very selective manner, short relative to the euro, the pound, the AUD and the CAD. They've all got the elbow room to start outperforming the New Zealand dollar, as we think the New Zealand dollar is pretty cooked. Although it's been it's the default bid at the moment, but it won't be. And then you've got to this sort of situation. So if you get and the dollar is likely to come under pressure. The only thing that's been propping the dollar up really is reasonable data coupled with a pause in the equity markets, coupled with rising yields. So and normally when you get this sort of risk on global growth environment, you're going to start to see dollar weakness moving forward, and you've got this situation where they're printing like crazy, printing like no tomorrow. This will be affecting the purchasing power of the dollar, and ultimately will put a cap on any dollar strength in our view. So that's what we're looking at. So we're positioned short the dollar against the euro, the pound and the AUD, as we think they have the most to gain, and we're short the New Zealand dollar against the euro, the pound, the CAD and the AUD, as we think likewise they have the most to gain. So we're moving into the second quarter proper now. After this Easter break, we should start to see this general scenario playing out, that of China growth, dollar weakness, and targeted increases against the dollar and the NZD. So I hope that was useful. Don't forget to watch the sister video if you haven't already, which is the flow version of this for the same period, the 29th to the 2nd of the 4th. And hope your trading is going well, and if not, I'll see you Monday for the daily briefing. Thank you very much.